We view the passing of the Inflation Reduction Act as a significant boost towards accelerating our mission, while also scaling the battery supply chain at large in the United States. We believe Tesla is very well positioned to capture a significant share of that for solar storage and also electric vehicles.
Just at a high level, I'd say we do expect to fully meet the IRA's requirements. We're going to go basically pedal to the metal as fast as humanly possible to get to 1,000 gigawatt hours a year of production in the U.S. vertically integrated.
Lost in the noise of the Elon Musk Twitter drama and a terrible year so far for Tesla stock, there was a bill that was passed in the US that is an absolute game changer for Tesla. This bill, the Inflation Reduction Act, was signed into law on August 16, 2022, and it will single-handedly secure Tesla's dominance over the next decade, especially in its largest market, the US. Based on the information we know today and what I'm about to break down in this video, it looks like the IRA will be worth over $25 billion of value for Tesla just over the next 2 years alone, and then it will grow exponentially for the rest of this decade. It will massively increase Tesla's demand and margin in the United States, and it will single-handedly carry Tesla through any near-term concerns related to inflation, recession fears, and potential short-term decreases in demand. The IRA should also further extend Tesla's lead over the competition in the coming years, as it preferentially benefits Tesla way more than other automakers, even though in my opinion, this bill was put into place at least partially as a way to keep legacy auto like GM and Ford from going bankrupt. And lastly, and this is the thing that I haven't heard anyone talk about, I believe that the IRA will be a catalyst for other countries to increase their own sustainable energy incentives, and it will provide these same lopsided advantages to Tesla in many other parts of the world. Before we dive into the full impact of the IRA, let's first understand the present-day landscape of EV credits in the US, since this is currently Tesla's primary business. Many people don't realize that there is already a $7,500 tax credit in place for EVs today, and it has been in place since 2009. The reason most people don't know about this credit is that it was only eligible for the first 200,000 EVs for each automaker, and the two most prominent EV brands in the US, Tesla and GM, exhausted their credits 3 years ago back in 2019, and so most consumers haven't been receiving these credits the last few years. Toyota is actually the only other manufacturer to reach this 200,000 vehicle limit and just did so earlier this year. And so Tesla has been able to dominate the US market, taking over 60% market share of EVs sold, even as recently as last quarter, despite having the $7,500 disadvantage over everyone except GM. The Inflation Reduction Act will not only eliminate this disadvantage for Tesla, but it will actually tip the scales dramatically in Tesla's favor because of that market share figure I just gave you. Even if Tesla's market share drops to 40 to 50% in the US, that still means they will receive roughly 40 to 50% of the tax credits that are rewarded as part of the IRA, and that's just for vehicles. Once we start to consider the other elements like battery storage, solar, manufacturing, it becomes clear that Tesla will get the lion's share of the IRA credits. And as a quick aside, as we dive into these numbers, I'm going to just focus on what can be achieved over the next 2 years, because there are so many unknowns after that. There are still many unknowns even in the short term, even though the credits are set to begin next month, but it doesn't hurt to start putting some numbers together to understand where they could land. Many investors are concerned about short-term noise over inflation, recession, Twitter, and potential demand issues. So I think it really helps to know that Tesla is going to start seeing the benefits of the IRA immediately and that they will be substantial. So let's take a look at the vehicle credits over the next 2 years. Based on Troy Tesla's data and projections with a month left in 2022, it looks like Tesla will close out the year with 517,000 vehicles sold in the US this year, with 450,000 of those being the lower priced Model 3 and Model Y vehicles. That second 450,000 number is the more important one because the IRA has a cap on the purchase price in order to receive the credit, which is $55,000 for cars and sedans and $80,000 for trucks and SUVs, so no Model S and X will qualify. So in order to be eligible for the credit, the Model 3 would have to be below $55,000 and the Model Y would have to be below $80,000. In addition to household income limits for both individuals and couples. If you want to see more about the exact structure of these limits, there's a great one-page breakdown that is on the screen right now and is also linked down below in the description. Tesla hit 32% growth for 3 and deliveries in the US in 2022 compared to 2021, and that growth rate should be fairly easy to surpass in 2023 and 2024, with Giga Texas now ramping exponentially. We know Tesla's internal goal is 50% annual compounded growth, but that is on a worldwide scale, not just in the US. So if we assume a conservative 35% annual growth rate for 2023 and 2024, that puts us at 607,000 and 820,000 3 and Y sales for those respective years. Now, not all 3 and Y vehicles are cheap enough to qualify for the credits, so we have to factor out some percentage of vehicles that would be too expensive. The highest price Model Y today without FSD is $74,990, so all Model Ys should be eligible under the $80K threshold, since anybody who wants FSD can always add it after the point of sale. For Model 3, though, the prices range from $46,990 all the way up to $65,990. So a good percentage of those Model 3s would exceed that $55,000 cap, including all Model 3 performance models. My guess is that the incentives of the IRA are going to push more consumers to choose between downgrading to a lower cost Model 3 or upgrading to the more spacious Model Y. So we're going to assume that 85% of the annual 3 and Y sales will be eligible for the credit, leaving only 15% out of range. That puts Tesla's eligible vehicles at 516,000 in 2023 and 697,000 in 2024. When multiplied by that $7,500 credit, that comes out to $3.8 billion in potential incentives for 2023 and $5.2 billion in potential incentives for 2024. And again, this is just for vehicle sales. To put this into perspective, there were a total of 525,000 EVs for all brands registered in the US for the first 9 months of this year so far. So this really just shows how big Tesla's lead is in the US and how lucrative Tesla's share of the EV incentive will be when compared to others. As most other EV manufacturers struggle to ramp up their production and they've continued to push back their timelines, Tesla will be stacking cash they can use to widen their lead. And we can't forget that cars and SUVs are no longer the only vehicles that Tesla sells. On December 1st, 2022, Tesla delivered its first semi-trucks, opening up a new segment of heavy-duty commercial vehicles that under the new Inflation Reduction Act could qualify for a whopping $40,000 tax credit. This credit is based on the difference between the sticker price of an electric semi-truck versus a comparable ICE semi-truck. And so all Tesla has to do in order to have their semis eligible for the credit is to charge at least $40K more than their ICE competitors. In terms of output, Tesla has a stated goal of producing 50,000 semis in 2024 alone, but they just started delivering them this month and will likely only deliver less than 100 this year. So I think that is a little bit overly ambitious for our estimates. I'm going to assume that they can produce and deliver 7,500 semis for 2023 and 35,000 for 2024. If Tesla is able to pull that off, that could come out to a potential IRA tax credit value of $300 million in 2023 and $1.4 billion in 2024. Not too shabby for a product that they hadn't even started delivering a month ago. The only other vehicle that may factor into the IRA over the next 2 years is Cybertruck. I do believe Tesla will achieve meaningful production of the Cybertruck in 2024, but my guess is the first Cybertrucks will probably start around $100,000 or more, so I will leave them out of my IRA projections for now. As we move over to the energy side of the business, we now have a brand new hefty 30% tax credit that will apply to all residential and commercial battery storage and solar. This means that any individual or commercial customers purchasing a Powerwall, Megapack, solar panels, or solar roof will receive a 30% tax credit on what they purchase. And this credit is actually not new for the solar side of the business, which has been receiving between a 26 to 30% tax credit for several years. But solar has been such an insignificant part of Tesla's energy business that those credits really haven't meant much for Tesla. Over 95% of Tesla's energy business consists of Powerwall and Megapack. And the biggest addition in the IRA is for battery storage. Most Powerwalls and Megapacks were not receiving any federal credit in previous tax policies, and now they will get that same 30% credit as the solar side. This also happens to be the fastest growing part of Tesla's business right now, so the timing is perfect with the IRA. If you haven't watched my last video on why Tesla Energy will triple next year, you can find that in the description as well. With the new Megapack factory in Lathrop, California ramping fast, I'm expecting quarterly growth on the energy side of the business of 30% per quarter for the next several quarters. My personal assumption is that they will build another mega factory at some point in 2023, or at least find a way to add one on at Giga Texas. But because that hasn't been announced yet, I have the energy growth slowing down slightly towards the end of 2023 and through 2024 to keep my numbers somewhat conservative. That puts my estimate for energy revenue at over $10 billion in 2023 and over $18.5 billion in 2024. Elon most recently said on the Q3 earnings call that he expects energy to grow 150 to 200% per year. So both of these projections are somewhat conservative based on that. Before we can apply the 30% tax credit, we first need to remove some portion of that revenue that would be sold internationally and therefore not eligible for the US credits. From my understanding, the majority of their solar and Powerwalls are sold in the US, but they do a lot more Megapack projects internationally. Let's assume that 60% of their total energy revenue comes from the US, and then do the 30% IRA tax credit on that. That puts us at $1.8 billion and $3.4 billion in potential credits for the next 2 years on the energy side, which is not too shabby for an often forgotten part of Tesla's business. Speaking of forgotten parts of Tesla's business, the IRA also has credits for manufacturing batteries and modules. Under the Advanced Manufacturing Production Credit, there is a $35 per kilowatt hour credit for battery production and a $10 per kilowatt hour credit for module production. This combines to $45 per kilowatt hour for anybody who is producing the batteries as well as assembling the modules. To put this into perspective, a normal battery pack size in a Model Y is around a 75 kilowatt hour pack. So this credit could potentially be worth $3,375 per Model Y for the company that manufactures the batteries and assembles the pack. Now, I'll admit there are still a lot of unknowns about this side of the credits, and I want to address those before going too deep into the numbers. First off, one of those unknowns is whether Tesla could essentially double dip on these credits, since they are moving in the direction of being both the manufacturer of the battery as well as the one producing and selling the cars. There is language in the IRA about the batteries and modules needing to be sold to an unrelated person, and so this may mean that Tesla's vertical integration excludes them from these credits. The second big unknown for me is how their current deal is structured with Panasonic, who runs the battery production line in Giga Nevada. This partnership has been going on since Tesla opened the Nevada Gigafactory in 2016 and has a current estimated battery output of 39 gigawatt hours per year. Based on the agreement, it's unclear if Tesla or Panasonic would receive the credits or if they would be split. Even if Panasonic is the main beneficiary of the credits, it should still allow Tesla to renegotiate how much they are paying for those batteries. The third and final big unknown is current output of Tesla's new 4680 cell and how fast this will ramp up over the coming years. We heard on the Q3 earnings call that they were approaching 1,000 car sets per week, and that they've recently tripled production from the previous quarter. Because this is such a big unknown, I'm going to aim for more conservative projections until we hear more specific numbers. The most encouraging thing for me personally about this advanced manufacturing production credit is actually hearing Ford CEO Jim Farley's positive statements on their Q3 earnings call about how he thinks these are going to impact Ford's business.
We expect the U.S. Inflation Reduction Act to have a wide range of positive impacts for both our customers and for Ford. What's not yet clear is the degree to which the IRA will drive customer demand versus offsetting our EV investments and growth. The first opportunity is our largest, the battery production tax credit of about $45 per kilowatt hour. From 23 to 26, we estimate a combined available tax credit for Ford and our battery partners could total more than $7 billion, with large step up in annual credits in 27 as our JV battery plants ramp up to full production.
If Ford, who currently doesn't do any battery manufacturing themselves, but has many of these joint ventures in the works, is most excited for this aspect of the Inflation Reduction Act, then that tells me that a company like Tesla stands to benefit to an even greater extent, since Tesla is both a producer and a purchaser of these batteries. So let's do some quick math to see where these credits would fall if Tesla were to receive all of them. The Panasonic line is simple because they have a stated production output of 39 gigawatt hours annually, with a goal of a 10% increase to 43 gigawatt hours in 2024. I have both the 4680 pilot line in Fremont and the new 4680 line in Giga, Texas, starting 2023 around 5 gigawatt hours of annual output, but the line in Texas should grow much faster throughout this year and next. I estimate an output of 7.5 and 10 gigawatt hours from the Fremont pilot line over the next 2 years, and 18.5 and 100 gigawatt hours from Giga, Texas over that same time frame. If all those come to fruition, we are looking at a total battery production of 65 gigawatt hours in 2023 and 153 gigawatt hours in 2024. At the $45 per kilowatt hour full credit, that comes out to $2.3 billion in 2023 and $6.9 billion in 2024. All in all, from vehicles, semi, energy storage, solar, and battery production, we could see Tesla benefit to the tune of $8.2 billion in 2023 and $16.9 billion in 2024 for a total of $25+ billion of potential value just over the next 2 years. To put these numbers into perspective, Tesla has done $66 billion in total revenue over the last 12 months, and their GAAP net income over that time is $11.2 billion, and that's globally. And so we could see a financial impact from these credits in 2024 alone that could easily exceed their GAAP net income over the last year. And surprisingly, that's not the full extent of the potential credits for Tesla that are in the Inflation Reduction Act. There are also credits for sourcing and producing minerals. There are credits for manufacturing solar cells and modules, as well as building out electric vehicle charging stations, all things that Tesla has a hand in. I won't do any calculations on those in this video, but it's very likely some of these will go directly to Tesla, or at the minimum, help drive costs down throughout the supply chain so Tesla is able to drive down their expenses. But before we get too excited about this $25 billion number, let's talk a little bit more about how these credits work, since it's not like the US government will just be writing Tesla a check for this amount. And actually, when we look at the credits for vehicles, semis, solar, and battery storage, all of those credits are actually meant for the end consumer, not for Tesla. The only credit that would go directly to the manufacturer is that advanced battery manufacturing credit. So why spend the time making this video, and why make a big deal out of all these credits? Because these credits essentially give Tesla $25 billion of versatility and pricing power that they can stack on top of their industry-leading profit margins to generate more demand or profit as they see fit. This is especially true with that $7,500 EV credit because starting on January 1st, 2024, this will actually be a point of sale discount that will come directly off Tesla's sticker price at the time of purchase. So these credits give Tesla three main choices. They can keep their prices the same and have endless demand because the customers will be receiving the entire tax credit as a discount. They could do the opposite, which is increase prices the exact amount of the credits being given. So cars would go up by $7,500, energy products would go up by 30%, which means that if demand stays the same, Tesla will essentially get all the credit for themselves while keeping the prices the same for the end consumer. Or the third and final option is they can meet somewhere in the middle where they increase prices somewhere around 50% of the credit value. And so Tesla is able to benefit significantly from higher profit margins while the consumer pays a lower price than they would have prior to these credits. My guess is Tesla will likely do some version of the third option. They've already been increasing their vehicle and battery storage pricing several times over the last few years, and I expect those price raises to continue. Vehicles have been backlogged all year in the US, and megapacks are sold out until the back half of 2024. If they go with that third option of meeting in the middle, that means that a Model Y that currently sells for $65,000 and has a gross profit of $19,500 at a 30% gross margin could now cost the customer $61,250 after credits, but would equate to a $68,750 sale price for Tesla and a new profit of $23,250 per vehicle, despite the consumer paying less. So I don't think it's a stretch to say that of that $25 billion in credits that we found earlier, somewhere around $12.5 billion of that will equate to discounts to the consumer, and another $12.5 billion will end up being additional profit for Tesla. At least that's my guess. And at the beginning of this video, I told you that Tesla would be the largest beneficiary of the IRA, and that the IRA would extend their lead over the competition. Let me show you what I mean. Ford is their next closest competitor in the US right now, with a 7% market share of electric vehicles. We have to remember that Ford doesn't produce semis, they won't manufacture their first batteries in the US until at least 2025, and they don't offer any battery storage products. So their only opportunity to take advantage of the IRA credits is through their electric vehicles, primarily with their F-150 and Mustang Mach-E models. Based on my estimates, which honestly I tried to be super generous to Ford, I believe that Ford can sell 112,500 eligible vehicles in 2023 and 225,000 in 2024. They've only sold 40,000 vehicles in the US total for the first 3 quarters of 2022 so far, so that would be a pretty solid increase into next year, and it would also exclude any of their long-range F-150 models, which are all above the $80K price threshold for trucks. So Ford's potential credit will likely fall somewhere near $850 million in 2023 and $1.7 billion in 2024. For batteries, they don't plan to have any of their joint venture facilities open until at least 2025. So the best they can hope for over the next couple years is that their battery suppliers lower the cost to Ford, as they're now the ones receiving these credits. So Ford is likely looking at potential upside of $2.5 to $3 billion over the next 2 years versus Tesla's $25 billion. And obviously this pales in comparison, which means that Tesla will be able to use this additional cash generated to invest in new gigafactories and megafactories, to increase battery production, and to improve full self-driving. And they're likely going to be able to invest in many more things that we currently don't know about or can't predict that will only further extend their lead. But that's not the end to this IRA story. Since this bill has been signed into law, there has been a gold rush of commercial investment rushing to the United States in the form of new EV manufacturing facilities, battery production plants, solar investments, mining, and more. In October, Forbes ran an article stating that $28 billion in new sustainable energy investments had been announced in the first 2 months since the signing of the IRA. And we've had several announcements of new multi-billion-dollar factories since then. The IRA is so significant that it has actually upset many other countries like South Korea and most of the European Union, as they see it as a violation of US trade agreements because it puts foreign imports at such a disadvantage. The EU is already in talks with President Biden to alleviate some of these foreign restrictions into the IRA. But ultimately, it seems like everyone is realizing that they will have to go on the offense and create more homegrown incentives that will attract and keep manufacturing in their native countries. And this has been compounded by the Russia-Ukraine war, which has been a major catalyst for many countries to realize that not only do they need to decrease their reliance on foreign oil, but that energy independence through sustainable sources like solar and wind and batteries is just as much about preventing the next war as it is about decreasing climate change risk. And the United States was very much a laggard in this regard for years, especially compared to a country like China, where over 50% of the world's EVs are still sold today. So now that the IRA has turned the tables for the US, this sets the stage for other nations to push for similar incentives. We've already seen many country leaders publicly try to woo Elon Musk and Tesla to bring their next gigafactory to their home country. These things are all indicators to me that other countries will do what it takes to be competitive with the IRA and ensure that they are not behind in this new sustainable energy economy. So if you've watched Tesla stock get pummeled over the last year and you are worried about Elon being too focused on Twitter, or the impact of inflation or an upcoming recession or potential drop in demand, then I hope this video helps ease your concerns. And that $25 billion figure I gave you earlier is just the start. Most of these incentives run through 2030 or 2032 before they start phasing out. So we will see these credits grow exponentially in the back half of this decade as Tesla's production scales. We should know more about the exact details of these credits in the coming weeks and months, but hopefully you found today's synopsis valuable and encouraging. If you have any feedback, questions, or comments, please leave them below. And of course, thank you for watching.